Palantir's stock has really taken off this year, hasn't it?
It really has. Quite a climb.
Yeah, we're looking at something like, what, over 40% year to date? This is as of late April 2025.
That's right. Pretty impressive numbers.
So if you're watching that, you might be asking yourself the same question we are, especially since you flagged this article from the Motley Fool.
Yeah.
Is it, is it too late to get in on Palantir?
That's the big question.
So our goal in this deep dive is to really unpack what's been driving this performance, understand it a bit better, and ultimately help you figure out if this is still an opportunity or if maybe that window has closed.
Okay, let's get right into it then. So Palantir Technologies, the name kind of interesting, right? From the Lord of the Rings, those seeing stones.
Right, the Palantir.
Exactly. And they're basically a data mining and analytics company. They help clients sift through just massive amounts of data, find trends, and hopefully make smarter decisions.
And they have those two main platforms.
Yep. Gotham, that's the one for government clients. Think most U.S. government agencies, military branches, that sort of thing.
Okay.
And then there's Foundry. That's geared towards commercial clients. Big names use it, like Morgan Stanley, Airbus.
So big corporations, too.
Definitely.
Yeah.
And what's interesting now is they have these tools, AI-powered tools that let clients build their own apps within Gotham or Foundry.
That adds another layer. And the origin story is, well, it's not your typical startup story either.
No, definitely not. Their initial funding actually came from In-Q-Tel.
Which is?
That's the CIA's venture capital arm.
Yeah.
So, yeah, a bit unusual. And for a long time, their early history, they were very, very reliant on government contracts.
I think I remember reading reports about their tech being used in some pretty high-profile situations.
Absolutely. That government focus early on really shaped how they grew, especially as they later expanded more into the commercial sector.
Okay, so let's dive into the stock surge we mentioned. The article really highlights it. Palantir up over 40%, while the Nasdaq is actually down, over 10% in the same period this year?
Yeah, quite the contrast.
What's behind that? What are the key factors driving Palantir up so much?
Well, the article points to two main things: accelerating sales growth and really soaring profits.
Okay.
If you look back, remember they had their direct listing in September 2020. Their initial goal was, I think, at least 30% annual revenue growth. And they actually beat that easily in 2020 and 2021, 47%, then 41%.
Wow. Okay.
But then things slowed down a bit in 2022 and 2023. Growth dropped to 24%, then 17%.
Why the slowdown then?
It seems like it was a mix of things. The timing of some big government contracts, plus, general economic headwinds hitting their commercial clients.
Yeah.
Businesses were maybe tightening their belts a bit.
Right, that makes sense. But clearly something turned around again. You mentioned soaring profits.
Exactly. That's the fascinating part. They actually hit GAAP profitability in 2023. Yep.
GAAP. So generally accepted accounting principles. That means like real profit, not just adjusted figures.
Precisely. First time profitable under standard accounting rules. That was the big deal. It signaled they were getting more financially mature.
How'd they manage that?
It looks like they really focused on streamlining spending, and they cut back on stock-based compensation, which can be a big expense for tech companies.
Okay.
And then in 2024, boom, 29% jump in revenue, and their GAAP earnings per share more than doubled.
Doubled. Okay, so what fueled that acceleration?
It looks like strong growth in their U.S. commercial business was a big part, maybe benefiting from lower interest rates, making companies more willing to invest. Plus, increased demand for their government services, perhaps linked to geopolitical conflicts, increasing the need for data analysis.
And the AI tools you mentioned.
Yes, definitely.
Yeah.
Wider adoption of their AI tools across both Gotham and Foundry seems to have been a really crucial factor driving that recent growth.
And the article also mentions getting added to some major indexes. Did that help?
Oh, yeah, that's important context, too. They got added to the S&P 500 in September of the prior year, and then the Nasdaq 100 in December.
Right before this article.
Exactly. And that kind of visibility boost is significant. It puts the stock on the radar for a much wider pool of investors, especially index funds. More eyes, potentially more demand.
Makes sense. So what about looking forward? Is this kind of growth expected to just keep going?
Well, Palantir itself is forecasting, I think, 31% revenue growth for this year, 2025.
Yeah.
And they expect to stay GAAP profitable.
Okay, 31%. That's still pretty strong.
It is. And analysts are looking even further out, projecting a compound annual growth rate gauge ROAR of around 31% for revenue and, get this, 51% for GAAP EPS between 2024 and 2027.
51% earnings growth compounded? That's ambitious.
Very ambitious. So the growth story on paper looks quite compelling.
But And there's always a but, isn't there? After all that positive stuff, the article really pivots to valuation concerns. This is where it gets maybe a bit scary for potential investors.
It does. This is the core caution in the piece. The growth is there, or at least projected, but the author is really concerned about the price you have to pay for that growth right now.
Okay, lay it on us. How high are we talking?
At the time the article was written, Palantir's market cap was about $253 billion.
$250 billion, roughly.
And the stock was trading at 67 times this year's sales, not earnings, sales.
67 times sales.
Wow. And wait for it, 354 times this year's projected GAAP earnings per share. That was based on a share price around $109.
354 times earnings. Okay, that number definitely jumps out.
It really does. And that's the author's whole point. They basically say these kinds of multiples look more like meme stock levels.
No, stocks driven more by hype than fundamentals.
Exactly. Not like a typical growth stock where you might expect a high multiple, but maybe not that high relative to actual projected earnings. It suggests the market has already priced in a huge amount of future success, maybe even perfection.
So the worry is that it's just priced too high right now. Are there other potential problems the author sees, other headwinds?
Yes, definitely. It's not just the valuation in isolation. They point to a couple of key risks. First, that U.S. commercial business we talked about.
Yeah, the one that was growing strongly.
It accounted for about a quarter of their 2024 revenue. The concern mentioned is that potential tariffs under a Trump administration, well, they could lead those commercial clients to cut back on spending.
Ah, okay. If tariffs raise costs for businesses, they might pull back on big software contracts like Palantir's.
That's the potential worry. It could make it harder for Palantir to land new deals or expand existing ones in that sector if companies get more cost-conscious.
Okay, so that's a risk on the commercial side. What about the government side? That's still a huge part of their business.
It is, but there's uncertainty there too, according to the article. Again, looking at a potential Trump administration, the author notes there could be government spending constraints.
Even for defense and intelligence type stuff where Palantir is strong.
Well, while Palantir has been landing new government contracts, the article brings up a past comment from Defense Secretary Pete Hegseth about potentially cutting the Pentagon's budget significant, like 8% a year for 5 years.
8% a year, that would be a big cut.
Huge. Now, whether that happens is obviously unknown, but the possibility of budget constraints on the government side is presented as another risk factor for Palantir's future growth.
So potential pressures on both main parts of their business. And didn't the article also mention something about Palantir's own track record with forecasts?
Yes, that's another important point the author raises. They remind readers that Palantir actually missed its own ambitious growth targets back in 2022 and 2023.
Right, when growth dipped to 24% and 17%.
Exactly. So given how high the stock valuation is now, the author implies that if Palantir misses its targets again in the future, well, the market reaction could be pretty severe. Investors might not tolerate any stumbles when the price is this high.
A correction, basically.
Potentially a significant one, yeah.
Okay, so you've got the strong growth, the profitability turnaround, the AI potential. But then you've got this sky-high valuation and these potential headwinds from tariffs or budget cuts, plus the risk of missing targets. Putting it all together, what's the final word from the analyst in this piece?
The conclusion is pretty direct. Despite acknowledging the growth, the author strongly advises investors not to chase the stock at these current levels.
Well, by now.
Essentially, yes. The main reasons given are that extreme valuation, which they see as just too stretched, and the potential for a significant price drop if those growth expectations aren't met, or if those risks, those headwinds we discussed, actually materialize.
So it's not saying Palantir is a bad company necessarily?
No, not at all. It's more about the stock price being disconnected from the near-term, maybe even medium-term fundamentals and risks.
So it's a not at this price kind of verdict rather than a never buy Palantir.
Exactly that. The author suggests a more prudent approach might be to just wait. Wait for a potential pullback, a correction in the stock price.
Look for a better entry point.
Precisely. Find an entry point that offers, a better balance between the potential upside and the downside risk.
Okay, so let's bring this back to you, our listener, to sum up. Palantir has shown really impressive momentum, no doubt about it, strong revenue, profit growth kicking in, both commercial and government sectors firing, and AI is a big part of that story.
This analysis from the Motley Fool is waving a pretty big caution flag, saying, hold on, basically. The valuation is extremely high, maybe even in meme stock territory, according to the author, And there are real potential risks ahead: government spending, commercial client pressures.
Right. So circling back to that first question, is it too late to buy Palantir? Well, according to this analysis, the answer seems to lean towards yes, probably for now.
The suggestion is patience. Maybe wait for things to cool off a bit, wait for a potentially more attractive price before jumping in.
Okay. So thinking beyond just this article, Palantir plays a really unique and, you could argue, critical role in data analytics for governments, for major corporations. Given that, and considering the author's points about valuation, what else might influence its long-term path? Maybe something for you to think about.
Yeah, that's a good point. Perhaps looking deeper into their competitive landscape. Who else is doing this kind of work? How does Palantir stack up?
Or maybe the stickiness of their contracts. How hard is it for a client once they're using Gotham or Foundry to actually switch to something else? That could be a huge factor.
Absolutely. Those sorts of questions, competition, customer loyalty, maybe even the long-term evolution of AI itself, could give you additional insights to consider alongside this valuation perspective. Lots to mull over.